Invoice financing, one of the biggest needs on the market. Most of our entrepreneurs, with me inclusive, because I also run a business, most of the money we need is working capital. True or false? So we're not really looking for the bigger tickets of 500,000 US dollars. We're looking for the 10,000 because, so what happens is, I'll give you a very typical example of one of our clients. So we get Jessa, who is a big consumer of milk. And then we go to Jessa and then have a partnership with Jessa. And then we go down to the people supplying Jessa, and those are the people we invoice. I mean, those are the people we finance. Is it making sense? So for us, pretty much, we look at people who are selling to credible buyers. So before you come to us, one, the criteria is that you must have a credible buyer. And by credible, we can wait these buyers out. So you just don't bring an invoice which you've created with your friend who is a supplier. So for us, we vet the invoice to begin with, because our risk, our off-taker in that case is who? Yes. The buyer. Does that make sense?
It does make sense, but does Jessa have to be tied into it?
Not necessarily, but credibility for us would depend on how credible you are with Jessa. So typically, we would not come in a room and be looking for clients. We'll be going to our off-takers. So we have a list of people who are credible in our eyes and our system, and those are the people we do business with. However, you could also have somebody who you've done business with over the years, and then we could look at how you've been dealing with them, and we could also take that risk. So it's not cast in stone that it should be somebody we know. No, we also meet new people.
I see. So who pays you?
So ideally, this is what would happen. Assuming Roy over here is the person we're financing, they would give us the invoice. We'll go to Jessa, and then we'll ask Jessa, at the time of paying Roy, they would wire us the money. Now, the biggest challenge, I would be honest with, we will not grow when it comes to funding because of character. I hope Paul is not listening. So our biggest challenge in all the financing I've been involved in is character. So you find that at the end of the day,
Paul, listen carefully.
Jessa has to pay us, but somewhere along the lines, Jonathan would change the account and say, I think I have issues on that account, maybe pay on this one. But ideally, the way this works is, if we are invoicing you, the person you're offering the service is meant to pay us at the end. Now, there are unique situations where you don't want to lose credibility in front of the person you're doing business with. We also have a tripartite arrangement with the banks that could also guarantee us to finance you and get paid without the other person knowing. I don't know if it makes sense.
Yeah. Thank you.
Our foundation is we really want to see more global African businesses. And so when we start engaging the entrepreneur, we're always seeing how far can he go and how big can he get. One of the biggest challenges that we have found is, should I say, a stagnant mindset. It reaches a point where somebody feels the business works, they're comfortable. So I'll just give an example. Fortunately, I'm not sure, none of you will obviously know. This is a company that has registered in all the East African countries. By virtue of connection, he can be given a city in Kenya, Uganda, to actually offer the whole city a service. We have an offer of close to $12 million for the person, but the challenge is he's not ready. And you really struggle, and you know where you've got a lot of offers. So the aspect of growth, seeing how big can it be? Obviously, the bigger you grow, there are a bit more of sacrifices in terms of capacity, team, and then prioritization.
So what is not ready in that entrepreneur? Is it that they don't have the relevant personnel? Is it that they feel that is too big for them? Is it that they don't have relevant equipment or infrastructure? What is not ready?
I would say it's difficult to explain, but the mind.
Oh, the mind.
The mind it takes to start a business is a bit different from the mind that it takes to grow a business. Like how you think.
Please give that a hand clap. Please.
It's a bit different how you look at things. Looking at, and I think he mentioned quite well when he mentioned strategic partnerships and alliances. It takes a village. These unicorns synergize, they merge, they acquire to actually get to where they are, to take bigger markets. But that is a mindset that we are really struggling to inculcate in our local entrepreneurs.
Thank you.
Obviously, it takes some time, but over and over, what we've seen is once somebody's systems are fairly structured, there is a bit openness to actually approach that kind of direction. It's just that it takes time. We are nurtured, our culture has that ownership. You need to have your own land, you need to have your own car or something. But as you can see, Safe Border, how many borders does it have? How many cars does Uber, and how many houses does Airbnb have? So that kind of mindset where you invest more on variable costs to allow scalability and less of the fixed cost dimension in terms of growth and scale, and flexibility to expand or manage risk is something that we are still laboring to help entrepreneurs.
Thank you. How do you talk about access to financing? Is that too broad or is it okay? All right.
I think, okay, because I told you I started with 30,000 shillings, and that was Ugandan shillings, you know?
I thought dollars.
No, it was Ugandan shillings. So I grew the business. I started when I was unemployed, and that's how I started the business. And for me, it was just something I was playing as I looked out for an option, but it became serious, I think in 2014, when a lady walks up to me, because I work with smallholder farmers. Right now, there are about 5,000 farmers. And I remember that time, this person walks up to me and tells me, you know what, Sandra, from buying from us, you're changing our lives. She's paying us school fees and all that. And she had tears in her eyes. So I think that's when I started taking the business serious at that time. And that's when I started looking out for certification for shea butter and all these other things we have done for years now. I would say, as an entrepreneur, what I've seen is there is money. I'll be honest with you. There's a lot of money out there. But just like the way the 5 C's are, all like what he has mentioned, it's your capacity. Because at the level where I was when I started at 30,000, I remember my first loan was about 500,000. That's about $150. Yes.
From a bank? Or?
Yes, from a bank, yes. I used to sit in Pride Microfinance. So they used to give us loans which are non-collateral, you know, unsecured, yeah. So that's how I started borrowing. And then also I took on from some friends. So that's how I started growing the business. Then when I pitched in 2016 with UNCTAD, I remember I was one of the people who pitched, and I won some grants right there. And I was voted the best in the world with the best prototype and the idea I had. So I kept on running the business, but what I did as an entrepreneur is I grew organically. Like I kept on growing the business, kept on testing the different prototypes, kept on seeing how I'm doing the different bits, then putting in like what he said, the audits, the what, those are the things I was able to fit in. Then also getting compliant, like the URA and all these other systems that you require. So now when my capacity grew, I think by that time, I didn't have like a solid business plan, but I used to have just goals for each year I would set for myself. And now when I grew and I took the business seriously, I think in 2017, 2018 was my turning point when I went to Atlanta and I got certification from one of the American Shea Butter Institutes. And now I realized I needed more money, but to get more money in Uganda, you need more collateral. Like the 5 C's tell you, need more collateral to get more of this money. So I started now sitting down to say, what kind of investor am I looking at? Because now the levels you are, the different levels, there will be access to money, but there are different strings that will come along that. So I kept on running the business, but now also doing my second, I did my second business plan. So the first investor I reached out to in 2017 looked at my business plan and told me, your business plan is not proper. And honestly, it had some financials missing and some details missing in the business plan. So I went back to the drawing board and I was able to redo the business plan. I put in the right figure. And now for this round, because at this point I was renting, the factories we are renting, And I started now looking out for expansion, and that's how the $2 million came in, you know, for the expansion for both Gulu and also down here in Nakabugo. So that's how now I drew the next business plan, and that's the business plan that I've been raising the funds for. So it was affected by COVID, but I kept on. So my second investor that approached me, because my business has a lot of impact, not just only good products, not only just, also me as a person, just like the way you said earlier, investors buy into you as a person. And your character, your ways, your passion. I think I had different offers coming in, but just like marriage, I knew what kind of investor I wanted.
Sandra.
And that's how I was able to, sorry.
No, go on.
Yes, and that's how I was able to know, okay, when this investor gave me an offer, I'm like, no, this is not the kind of investor I want. So by the time we zero down to this investor, they tell me, do you choose this or you choose this? Do you choose equity or you choose a loan? I'm like, this money is a lot. I can't just choose only a loan. So I chose equity. So if you choose equity financing, it's a longer process because you get to know someone in detail. So for me, it was a little bit longer. It was about 3 years because they had to get to know me in and out in full details. But also the beauty about it is they were giving me a lot of money without so much strings like any other investor would do. So it was me getting patient. So I think for me, I would say there is money at every level, but also your capacity, you have to be prepared to receive this money. And just like the way I said, I don't look like 12 years, you as a person, you have to work. I say I work hard on myself much more than even I work on the business.
Sandra, thank you very, very much. Yes, I think hand clap is deserving.
I think when I wrote the first business plan, because actually the first business plan, someone flew in to help me out, but they didn't capture my idea very well. So the second business plan, I really thought through every single bit. Then I had just someone extra who just helped me a bit on the technical bit, especially where the projections were involved, and also capturing my prototype, what I was seeing, because I had a vision of what I was seeing, and this person had to help me capture it in such a way that it was much more better.
Okay.
Yeah.
But you were evolved.
Yes, and then also just on a character bit. I think also, I don't come from a wealthy home, by the way. Some of you might look at me and I don't come from a wealthy home. So in Uganda, what I've realized is people are willing to help you, because I've had so many people, I've had friends, a person who can say like, Sandra, I'm giving you 100 million, go use it, no interest, nothing, and then I pay it back. So I've had different scenarios. Okay, sometimes things don't go well, but don't run away.
I see.
Okay?
Thank
you.
Go
back, that's the character bit. Go back, tell them things are not okay. This is now my plan. So there are things that happen that way. Sometimes our character may not, but don't run away. And I think for me that has helped me a lot.
Work on yourself as you work on your business. I'm also hearing that it is good to lay things out in a business plan. The projections have got to read right. And even if you get a technical person to do it for you, it is your idea. You got to be in it. I'm hearing here that there is a lot of money out there, but I'm also learning that it's not happening in 12 months. It is happening in 5, 10, 12 years. You got to be in it for the long haul. It's not just, you know, what is the expression Ugandans use? Okusala deal. What is that in English? Akagwira okusala deal. It's not Paul, what I'm saying is, it's not a question of cutting deals. It's a question of growing a business. We tend to mistake making money with growing a business. Just because you've cut a deal today and you cut it also on Friday does not mean you're growing a business. That's what I'm hearing. But if you're committed to doing it, there is money out there. The question of character came in. Let me say something about character and then I pass it on to Paul. Recently, a young professional, I'll be honest, I work a lot with architects and structural engineers. A young professional, an architect, asked me to please send him the remaining money. And I said, where is the report? And he said, oh, I gave it to your partner. Didn't you get it? And I said, I didn't get it, but if you gave it to my partner, it's all right, I believe you. Let me send you the money. I sent the money. 5 minutes later, what have you done? You've sent the money on the wrong number. I said, but that's your number. I said, you said, no, I had a loan on that number, and now I'm not getting money. You know, Paul, you can get money, like invoice financing, on the go, on your phone number. Because M-Pesa, the mobile money, has taken this region by storm. And you can borrow against that, and it can keep growing. It can keep growing. So if you borrow 100,000 and you pay it in time, next time you can borrow 200,000, pay it in time. You can go, I don't know the limit. Now, what I sent him was just above the limit. He needed money, but I sent it on the wrong number. So he didn't get the money. The point I'm making is, if you've borrowed 500,000, please let it go back. That's what I'm hearing here. Anyway, Paul, what we are discussing is this question of how we can get Ugandan entrepreneurs to access money. And we are looking at the question of what challenges SMEs face and how the enterprise support organizations can be handy. And you've heard what has been said here. Some of this may apply globally. Some of it may be unique to Uganda. In your view, talking about what you talked about before, venture capitalists, angel investors, family, friends, and fools, the 3 Fs, talking about listening to Sandra and what she's saying, hearing about the mindset, and yet seeking to go and bridge the gap. If I was to ask you, what is your picture as of now, what would you say?
I love how you talked about, you actually studied the investor and picked the right investor also, because it's a two-way relationship. It's not just them getting to pick you, you get to pick them too, and you get to tell them no if they're the not right person. But if she wasn't ready for those conversations, she couldn't say no and may have said yes to a bad deal, right? With the financial piece over here, are you ready with your documents? Do you show up in advance with the documents that they're going to require, or do you show up not knowing anything and then you're trying to now hustle to pull stuff together? A term that we use actually in the United States is know your banker before you need them.
Oh.
Build a relationship with your banker before you need them. So that way they also get to know your business. And this may be over 3 or 6 months. So now you actually put in the application, they've seen your journey. They know who you are. They know the ups and downs of your business. They know the challenges that are happening right in your business. And so now you're not just an application, you're actually a person that they know. And so when the application comes in, sometimes there's a different consideration they'll give you because they've seen your journey versus someone who's shown up immediately. Now it's an emergency, and typically they're not going to move on an emergency. Your emergency is not going to be their emergency, right? From that standpoint. So I think that readiness piece is studying what's going to be required, studying what's needed. And the last thing I'll say is even from a growth standpoint, is not to expect to go from 0 to 100 overnight, right? Any business that's going to grow, as you were saying, over time, not just cutting deals, but is going to grow, right? Grows in increments, right? Grows, and then sometimes it's increment, and then it's fast growth. Because we've seen plenty of times in the United States, probably here too, you can grow too fast and literally grow out of business, right? You can grow too fast and that you can literally be crushed by your own success because you grew too fast and then you didn't have the capacity to sustain how quickly business can come. So being ready at every level, being ready for the financial relationships, right? Being ready for growth, right? Those are all critical aspects of preparedness for different opportunities as they come along.
Based on the need, the kind of financing, because in some cases, it may not need a lot of intervention. In some cases, it does. So yes, we do. Speaking of who we support, when you are looking at raising financing, in most cases, you work with the founder, or at least somebody who has influence in the decision-making process. However, we have programs that help in the systems where founders can delegate the accountants, like we have a program where we are supporting 150. The founders are involved in the second milestone, which is financial analysis, while the adoption usually the founders have been delegating the people involved in the accounting and bookkeeping to actually be empowered with skills. So that's what I can comment about that. I also wanted to comment on Joram's comment on safes. So there's something about our industry. Safes are good investment opportunities, but it is highly dependent. The trigger points, our startups, and there is a rare chance, and some can actually take advantage. Safes are invested with anticipation that there's going to be a trigger point where we are going to have equity. Now, our kind of ecosystem, if you do not anticipate, because in many cases somebody can actually take advantage, and the money just basically he will feel he doesn't need the money, more money moving forward because of the mindset in not looking at growth. So it makes it a barrier for safes. What we are testing, at least I will say on our side, we are testing safes in a venture studio model where we sort of put a few things in order, but put a trigger point where, based on either performance from a revenue perspective, we are going to trigger the equity, and that converts. And typically the safe is like sweat. It's just that we see that there's opportunity, but the founders failed to sort of take it to another level. So what we have is we have entrepreneurs within the ecosystem who have either exited or have scaled their companies. So they have come in to sort of play a venture studio kind of, and come in as co-founders in some of the unique innovations that we have in the industry. Thank you.
Options, but just like the way you said, when you get investor ready, you'll get to know what you want as you. When you get ready to get in an investor, you're going to get to know what options you want to go for. I went for quasi-equity because that was the best option for me. Quasi-equity is when you have equity and also debt. So you have to choose your option as an entrepreneur of what you're comfortable with. Yeah, but there are different kind of options you can go for. On external, do I see myself without external funding at one point? Right? Is that the question? Yes. I think I told you I got to the point where, because I was the founder of the business and I used to borrow, still I used to borrow from the bank, but I reached a point where the business now, I was the lead covering the business, because here I was with so many farmers that I work with. I have orders, someone is like, you have a very good product, I want like a full container, which is like, that's about, let me say $1 billion shilling. I don't have the capacity machinery to produce that at that time. And this buyer insists to buy from me. You get it? So those are some of the things that drove me to look out for investor, because I had the market. I have very many customers in the room here, and they'll testify to you, our products are very good products. And quality is one of our key core values. Like, we have very quality products. So you find the market was now demanding much more from us, but we couldn't service the market to the capacity it could. So that led me to seek out for investors to ensure that the idea does not die on me, but it keeps on going. So that was when I got to get investor ready, to be able to ensure that someone else also adds more funding to what we have. I don't know if I've answered that well. Groups of companies, yes, it depends. I think one thing I've learned about diversifying, I think there's a course I did one time at Enterprise Uganda where I talked about what you have to diversify in. You know, if you're doing that, do it in a good way. Like, for example, like us, how I've been able to do that, because now I'm in oil seeds, and when we were doing this business plan, because the machine we're introducing is about 10 tons per 8 hours. Like right now, what we're expanding to, the one in Gulu, it's 10 tons per 8 hours. Now, me being with an engineering background and all that, I had to sit down with different engineers on the team and different people to say, okay, if you're looking at 8 hours per day for this machine to run, how can we be able to increase its capacity with other products on it? So I sat down with them, and definitely we looked at, yes, we are going to produce the shea butter, but then also the other oil seeds we could be able to look at. So as I sat down with the engineers, I made sure they place in other pellets that we are able to run with sunflower, we are able to run with other product. So when you're increasing these different groups, ensure that it does not affect the other business somewhere else. Now, also, if you look at the factory down this side, we have cosmetics, we have natural hair, we have for the skin, we have for the body, but also we have, because these are same people so clean, so we have also the detergents that are there. So each time we are increasing, we have different, you increase with what you're able to do, and that's what the Indians do. Like you find maybe they have a real estate, then maybe they'll do something else, but it's all connected, and that's how they're able to keep the money in check. So I think that's what could be that. Then for 12 years, yes, just like though when you get investor ready, you're going to get to know what kind of funding do you need. For me, at that time when I was approached, that was actually 2020. During COVID, that's when I was approached by an investor. But I kept on exporting, I kept on selling, I kept on servicing the market. You know, as we did the due diligence, we finished up the different processes, and until when I got an offer, and then definitely when you get an offer, then again you have to close the deal, and then also there are taxes involved, like especially if you're increasing your capital shares, you know. So I think for me, the thing I would say is I was able to wait for over 12 months because I was still doing something else. And the investor, I wasn't waiting for the investor to come in, but even if the investor didn't come in, I was keeping on going. You get it? Because actually that's the thing I've learned very importantly, that even when we're looking out for an investor, make sure you keep on going. Don't
be desperate.
Yes, yes, and actually don't be desperate before an investor, because it's like dating. Oh, you're looking for a partner. Never look for a partner when you're desperate, right? Not so. So also for an investor, never look for an investor when you're desperate. That's why you see that I've told you, know your banker before you have a need, because when you're desperate before an investor, they're going to set for you terms. But when you show that, like for me, what we did is our investor, we didn't care, like, you know, but you really want the money, but you don't show them that you're desperate for that money, and you show them that you have other options. So for me, I think even actually those times when my investor was each time when they could see another person pitching to us, they felt insecure, and that's what you need, and that's what we go through in dating, right?
Right.
So as you're looking out for an investor, it's the same thing. Don't be desperate. Don't because they'll set their own terms for you.
Okay.
Yet you have to set the terms. So for me, my investors trust me. They listen to me when I say let's do this here. They listen. You get it? Because I set the terms and I wasn't desperate for them.
Thank you, Sandra.
Yeah.
So, and I think one of the simplest things that you can do from a readiness standpoint, and you, all three of you probably could attest to this, is these are three great people to go meet with them, right? Ask them what was required for them to get what was needed, right? In your case, right, to get the money, but in your case, to give the money, like I'm sure they have some type of checklist. I'm sure they have some type of document list. I'm sure they have some requirements. You can just go meet with them, see what the criteria is, today, right, or tomorrow. Don't want to busy up your schedules, because that's simple to say, okay, well, out of these 10 things they're asking for, I have 5 of them. The other 5, now I need to go work on, right? Or I have nothing, right? Now I need to do a lot more work, right? Or I have 9 out of 10, and maybe I didn't realize it, and now there's a little bit less to work on from that standpoint, right? And so I think from a readiness standpoint, you make it simple, make it very practical. There's a book, probably have heard it, 7 Habits of Highly Effective People. One of those habits is begin with the end in mind, right? So if your end in mind is to get capital, well, go find out what they do to give out capital, right? And you don't have to make it complicated, because again, typically they're going to have a checklist. They're going to have a certain list of documents, right? Maybe it's a certain financial requirement, your debt or whatever it is, that they can, for the most part, probably tell you what it is. Then you can just do an assessment of yourself, and I'm sure they can probably help assess your situation to see, are you ready or not? And then how close are you? Far away from being ready, or are you closer to being ready? And now you know something very specific to work on, versus not going and talking to them and then guessing or hoping that you have the right information, and then you're desperate and rush to them. And most people who are desperate in those situations too, it doesn't work out well, or they can't get the money because they're not ready, because they didn't know what they needed in advance.
Thank you.
with, but going to the GEN Uganda community, when you look at investment readiness, as simple as a deal room. Now I'm wearing my investor hat. A deal room, if you don't know what a deal room is, please let's Google what a deal room is. Ideally, that's the checklist we have been talking about. That's what investors are interested in. Where is your deal room? What is your legal and governance? What are your financials like? What technology is like? These are the cores of your business. We have what we call a light DD. A light DD, somebody talked about it. I'm going to come and look at the commercial viability. Are you somebody worth investing in? And after that answer, the question is answered, the next question would be, now I really am interested. I want to come for a real DD. A real DD is what I said is evidence-based. You said you do this. Can you prove it? You said you have a board. Is it legally constituted? You said you have this. Because at the end of the day, investors are looking for where they can invest, not for your interest, but for their interest. So before they put in money, they need to think about their interests. Then I'll go with some of these things. Maybe let me end with one thing. This is the typical route of funding. There is going to be preparing to go in front of an investor. There is going to be preparation when you're dealing with an investor. And finally, I'll end with something we have not touched, which is what happens when the investor is actually going to invest. I would end by saying if an investor is giving you $1 million, they're not going to wire you $1 million, never. They're going to put it in tranches and say, well, from what we see in your financials, let's do maybe 4 tranches. We'll give you 250,000 US. Let's see how you use that. Now, it's also conditional because for everyone who has looked at a DD, there are definitely going to be gaps. There are going to be operational gaps. There are going to be management gaps. Now, they are going to also tie restrictions and say, we are going to give you this tranche, but fix this. So the point I was adding to, even when you're looking for investment, you must have money on the side to support. Because there are things the investor is going to want you to do, and they are going to involve you to put money. Companies have gone to take loans in order to get funding. Is that okay? I would end by saying I would wish we would have a clinic on this. Nothing technical, it could even be 1 hour. And then I see people like Tuvayo here, I see Rouge here. The people have actually stood in front of investors, institutional investors or VCs. And then let them share their experience, but some of us probably who have knowledge like council here, we can take you through that. So that anyone who is looking for funding, the next time you go before an investor, you're really ready.
Because oftentimes we're connected to people that we don't actually leverage. Or we'll have people stand up or sit down and say things, and then we don't actually reach back out to them when they're the very person we needed. The solution that they had was the very resource that we actually needed. Sometimes the most important people that we know are really the person sitting next to us. Because oftentimes, and we do this in the United States too, we have to remind each other too, that oftentimes we look outside the community for resources that are right inside our own community, that are right inside our own relationships. And so I just encourage you to utilize the resources within your own village, utilize the people. Because here's the other thing, the person sitting next to you is an expert also. They're an expert in their area. So oftentimes it isn't just the person with the title. It isn't just a person that seems like they may have a lot of money, right? It isn't just the person that may seem like they work for a big company. Sometimes the expert that you need is the person sitting right next to you, right? So you want to use them. And then lastly, when we think about the word collaborate, and I believe I'm here as a collaborator, right? So if you break that word down, right, it's co-labor. It means to work together, right? So we're here to work together, right? Because what you all do can benefit us. Because I'm a student too. So like I said, I've been here 3 times, and I believe I'm learning hopefully even more than actually what I'm able to even give when I come. Right, so I'm learning. Even today, I'm sitting and listening to everything that I've heard here, and I'm learning too, and adding it to, okay, what do I need to do better? What other persons do I need to know? Who do I need to connect with? So hopefully, you're doing that also. So again, thank you very much. It's been my privilege and honor to be with you, and hopefully this will, and not hopefully, this will not be the last time.